I'm Sarah, tutor at Accountancy Learning, and in this video I'll take you through the Management Accounting Techniques AAT Sample Paper 1 Task 3. So Task 3 is all about short-term decision making. So let's have a look at the first question. Complete the following statement. Contribution per unit is, and we've got to choose from different or the same, at all levels of output. So contribution is our revenue minus our variable costs, and that gives us our contribution per unit. So providing our selling price, so our revenue, so our selling price per unit stays the same and our variable costs stay the same, then the contribution will be the same at all levels of output. So it doesn't matter whether we produce 100 units or 1,000 units, per unit the contribution will still be the same. The next question. As levels of output increase, the amount of revenue per unit will, and we've got decrease, increase or stay the same. Then total cost per unit will increase, decrease or stay the same. And profit per unit will decrease, increase or stay the same. So we're told levels of output increase, the amount of revenue per unit is going to stay the same. And the key to this is going to be this bit here, per unit. So just because our levels of output are increasing, this is our selling price per unit, that will stay the same. Our total revenue obviously increases as the output increases, but per unit the revenue stays the same. Then we've got total cost per unit will, and this one is going to be decrease. And the reason for that is because our total cost will have our variable costs and it will have our fixed costs to give us our total cost. So the variable cost will stay the same, but our fixed cost will decrease as output increases. So our fixed cost, if we have a fixed cost of 1,000, then over 100 units, it's £10 per unit, but over 1,000 units, it's £1 per unit. So the more the output increases, the wider those fixed costs are spread. So therefore the total cost per unit will end up decreasing as the level of output increases. And then the last one, and profit per unit will. So we've now got another choice here, and the profit per unit is going to increase. And the reason that the profit per unit increases is because our total costs are decreasing So therefore, profit will increase. Next, we've got some true or false statements. So the first one, the amount of fixed cost per unit decreases as volume of output increases. So this is true. As I was demonstrating in the previous example, you can have your fixed cost of 1,000, and at 100 units it would be £10 per unit, but at 1,000 units it would be £1 per unit, as that cost is spread further. The second one, a stepped cost is fixed for a determined level of output. So this is true as well. So we need to think about what this means. So we might have a cost here for, say, 100 units, and those costs will stay the same, and then as we get to the next level, we are then going to have to step up for 1,000 units, and again and again. So a stepped cost is fixed only up to a determined level of output, making that statement true. Next then, we are given some information about Blendball Electronics Limited, who manufacture a variety of electrical components. We are given the number of units and the total cost of those units for production. And we are asked to calculate the variable cost per unit of product A28. So for this then, we are given two sets of units and two sets of total costs. And initially we may think that we just need to work out the variable cost by dividing the total cost by the units. But we have to remember that there is going to be an element of variable and fixed in the total cost. So we need to use what's called the high-low method. So to do that, we're going to have our highest cost minus our lowest cost. We're going to divide that by our highest units minus our lowest units. And that will give us our variable costs. So we can plug our figures in now then. So our highest cost is 26,420 and our lowest cost is 24,860. And we're going to divide that by our highest units minus our lowest units, which gives us 1,560 divided by 200, which is £7.80 variable cost per unit. We then need to calculate the total cost of producing 1,500 units of the same product. So now we need to work out what the fixed cost would be based now that we know what our variable cost per unit. So we can do that first of all by saying we know at 1200 units we've got a variable cost of 780 and that is going to be a variable total of 9,360. So our total cost was 24,860. We're going to minus off our variable cost that we've just worked out, which comes to 15,500. So this is now our fixed element. So now we can calculate the total cost of producing our 1,500 units here. So we'll have 1,500 is our new units multiplied by our variable cost per unit, $11,700. Then we're going to add on our 15,000. This is our fixed, which gives us 27,200, which is then our total cost of producing 1,500 units. We are then given a little bit more information about a different product called Q102 from the same company. And we've now got to determine what the margin of safety is. So, in order to work out our margin of safety, it's going to be, the formula for that is going to be our budgeted sales units minus our break-even units. So we have our budgeted production here, but we haven't got our break-even units. So the first calculation we need to do is work out what our break-even point is in the number of units. So our break-even point is our fixed costs divided by contribution. Our contribution is going to be our selling price minus our variable cost per unit. So our calculation for break even in units is going to be 880,000, which is our total fixed costs. And we're going to divide that by our revenue less our variable, and that comes to 1,600 units. So this is now our break-even units. So therefore we can now fill in our formula. So our budgeted sales units is 2,400. We've got our break-even units of 1,600, which gives us 800 as our margin of safety. Then we've got a question on how to produce a profit. So we need to produce a profit of 220,000, and we need to work out how many of Q102 do we need to sell in order to produce that profit. So the formula that we're going to need to use here is going to be taking our target profit, and we need to add in our fixed costs to make sure that we are covering our fixed costs. And then we're going to divide that by our contribution per unit. So we can now put our figures into the formula. So we have our target profit, 220,000. We're going to add our fixed costs, which is up here, 880,000. And then our contribution per unit, so we did this up here. I'm going to divide, and we're going to do 1,000 minus 450. So we end up with our calculation being 1,100,000 divided by 550, which is 2,000 units. So in order to get a profit of 220,000, we need to sell 2,000 units. The next question then, we have another product in the same company, S83, and we're given some various information about the product, and we're told that they're quite concerned about the product as sales of 1,200 units show a forecast loss. Then we're given some information about what 1,800 units would be, and then we need to use the information to complete a table for the sale of 1,500 units and 1,800 units. And it's important here to enter your answers to the nearest whole pound. So do check what format you need to enter your answers into. We're also told that any loss figure should be entered as a negative. So first of all then, we can deal with the 1,500 units. So the 1,500 units is going to be about the flexing of the budget. So the first thing we need to do is consider whether any of the information in the question up here is relevant to the production of 1,500 units and whether there'd be a profit or loss for those sales. This question only gives us information as things change at 1,800 units. So for 1,500, we just need to flex our budget. So to do that, we then need to work out a few figures. So we need to find our unit costs first. So for revenue, our unit cost is going to be 168,000 divided by our 1,200 units that we've already got our figures for, which equals £140 per unit. Our variable material costs, 44,400, again divide that by the 1,200, 37 per unit. And variable labour costs, 24,000. We're dividing that by 1,200 to give us 20 per unit. So now we can work all of that out for our 1500 units. So we're going to then be taking these individual costs and multiplying them by 1500 units to find our total for this new amount. So our revenue is going to be 140 times 1500. Our variable materials will be 37 times 1500. Variable labour is 20 times 1500. And then now we need to work out what our contribution is. So our contribution is our revenue minus our variable material minus our variable labour. So when you calculate that, you will have 124,500. Next are fixed costs. So these don't change. $1,500. So they are going to stay the same. And then we can then take the contribution, the total contribution, take off the fixed costs, and that will give us our total profit or loss. So that then shows a profit of 22,500. Now we need to have a look at 1800 units, and at this time it's not quite as simple as flexing the budget because we need to take into account the information that we're given at the top. So we're told that the revenue per unit is going to decrease by 10% for all units at that level. So the first thing that we're going to do is calculate now our new unit cost. So originally it was 140. It's going to decrease by 10%. So we can work out what 10% is. And then we can take that off. And this is our new unit price. Then we're told the variable material cost will decrease by £7 per unit for all units. So our original one was £37. So we need to take off 7, which is £30. So that's our new variable materials cost. Variable labour costs will decrease by 5% for all units. So originally it was £20 per unit. So we can work out what our 5% would be. It should be £1, and then we can take that off. So £19 per unit is our new variable labour cost. And then finally we're told fixed costs will increase by 10,000. So the original was 102,000, and that comes from down here. We need to add on 10,000 to give us 112,000 fixed. So now we can do all of our calculations. So our revenue then at 1800 is going to be our 1800 units, and we're going to multiply it by our new £126 per unit to give us 226,800. Variable materials is going to be our 1800 units, and we're going to times that by our new £30 per unit. to give us 54,000. Variable labour, we are going to be using our new cost of £19 per unit, and that's going to give us 34,200. And again, we now need to work out our contribution, which is our revenue minus our variable costs. Giving us 138,600. And then lastly, we need to now put in our new fixed costs, 112,000. And then we take that off of our contribution to give us our total profit of 26,600.